Steve Hill here with AIQ Systems. In this update, we're going to discuss the most recent market timing signals from the expert system within our Trading Expert Pro platform. What you see on your screen here is a daily chart of the Dow Jones Industrial Average with a price phase indicator underneath. The chart is currently displaying Heiken Ashi-mode candles. The green bars are, of course, uptrending in Heiken Ashi. The red bars are downtrending. And the colored bars that are not green or red are actually based upon a color study that is on this system to indicate where we have a high rating on the market. So let me explain ratings on the market itself. There are over 400 rules that run through an inference engine, a decision tree process where 400 different indicator states are evaluated. And it's one of these situations where if one rule fires, then certain other rules are then evaluated. And these decision pathways contribute to a high expert rating to the upside or the downside. And this can be indicative of a change in the direction of the market. The expert rules are based around the Dow Jones price action historically, and also on the internals of the New York Stock Exchange market. So this will be both the new highs, new lows, advancing and declining issues, and that historically is also evaluated using a large number of indicators. So once you have all of these rules in place, we're able every single day to generate an expert rating. Most ratings are neutral. June the 4th of this year, we had a 33-33, which means really no rules fired at all, or there were very few rules. Once the weighting of the rules that fire in an up direction or a down direction reach beyond 95 up or 95 down, and you won't have a 95 up and 95 down at the same time, once they reach this level, it's a significant level where we consider the rating has importance. So on this price chart here, I have actually indicated buy and sell points on the Dow Jones Industrial Average that are greater than 95. I've only marked on here the first in a batch of signals. So for example, and I'll just illustrate this right now, there's a sell signal right here. Let me just put the cursor on this particular bar here. It's colored yellow. So this yellow bar is a sell signal, 96 down. Remember, 95 or greater is important. So let's talk about expert ratings. So every single day has an expert rating on the chart. As I'm scrolling forward, the numbers here you'll see will change. We have a color study where there's white bars. That means there's a 95 or greater up signal. And where there's a yellow bar, it's 95 or greater down signal. I've annotated the charts with the buy and the sell signals. When there's more than one buy signal, we're only interested in the first one that fired. These subsequent signals just reinforce that up signal. When it's yellow, the color studies indicates it's a sell. And again, there's a buy right here. So let's go and have a look at exactly what goes on within this system. Let's make our way back over here. We haven't done an update on these market timing signals for a while. So let's start back here in the late February 2024. There is a buy signal on this day, which is February the 22nd. The buy signal is 95 to the upside. The rules or the contributory major rules that fired can be explored using the expert rules button. And here you'll have a list of different rules that are fired that are contributed. There are more rules, but these are the primary rules. I'll just read a couple of these to you. The advanced decline oscillator has turned positive when the up-down volume oscillator and the exponentially smooth advanced decline line are already positive. In this market, this is viewed as a bullish signal that could precede an upward price movement. And in this chart, obviously price action has been flattened out for a while. The previous signal was way back over here. The other rules that are in here, the new high, new low indicator, remember that's on the New York breadth data, has reversed to the upside. This is a reliable bullish signal that is often followed by an upward movement in prices. In this weak uptrending market, prices could continue in this direction. So you can see that's some of the rules that contribute to this signal. Price action moved up a little bit here, but it kind of faded out up the top here when we got a sell signal. Notice when I go to the sell signal, look at the rules that are in the sell signal here. We've got volume accumulation percentages decreasing. The 21-day stochastic has moved below the 80% line. In this downtrending market, it's taken as a strong bearish signal. So each time you have a major rule like this in place and you do get these signals, price action tends to move down. Market's in a trading range here, so we get a couple of signals, a buy for a short-term game, a sell, maybe a short-term game if you're going short or trading ETFs that move in the reverse direction to the market. Nothing happened until we had another buy signal right here, and then prices moved up. I won't go for every single one, but as you can see, here's another sell signal here, and then there was a buy signal down here a few days early, reinforced with two more buy signals, and then another sell signal at the top here. Get down to this pullback, and there's another buy signal for a nice move up. The sell back here, this is where we are currently. Just want to look at June to give you an idea of what's going on. The sell signal up here, 96 down, expert rating up here, volume accumulation percentage is decreasing, so similar to the one we had before where the 21-day stochastic has moved below the 80%. The market closing average has dropped below the 21-day exponentially smoothed average price. So these are factors that contribute to that 96 rating. Remember, the maximum rating is 100 on each side. Interestingly, we had this strong move down after that sell signal. There was no buy signal in this area here. What we do have is on 6/7, on Friday, we have another sell signal. So that's a reinforcement of this sell signal that's come up right here. Interestingly, the rules that fired in here, we have information on the advanced decline line has turned negative, and the up-down volume oscillator has turned negative. So you can see the information you get in there. They're just major rules. Remember, this to contribute to an up or down, there are some rules that are bullish and some that are bearish. When the majority of the rules are bearish, you get a stronger signal on the downside, and obviously inverse of that, when the majority of the rules are bullish, you get a signal on the upside. So that's the current status there, and it looks like there might be, a continuation of this trend to the downside is in place. The signals have been pretty good recently. Most areas where you get a little sideways movement, you might get whipsawed a little bit here, and there's only small amounts of gains to be had. The reason this system is tried and tested over 37 years now is that it is an expert system. It's an early AI, an inference engine, decision tree type process that just follows pathways through different rules. And it's complicated, but what it does is it's a standardized method of analyzing the market. And we haven't changed or tweaked these rules for a good many years, and for good reason, because it works fairly well. Want to check out what we do? Go to AIQsystems.com. You have 1 month trial for $1, which includes end-of-day data. This is an end-of-day system. We do also have a real-time system, but this market timing is in both of those systems. So you can try this out for yourself for a month. That's it. This is Steve Hill signing off. Have a great day.